So the 22 level, it was actually very, very important. And I basically said that silver was showing that once it gets above 22, it's probably going to be running. It's probably going to break out. We probably will never see sub 22 again.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we dig on into October in the financial markets, recording today on Monday, October 3rd. Certainly a nice day for gold and silver investors, starting the quarter off with a rally. And fortunately, to dig into some of the events going on in the economy, as well as the gold and silver space, is Don Durrett of goldstockdata.com. And also a prolific author on Seeking Alpha rather, where he, as his regular column, gets into a lot of the mining stocks as well, and quite a body of knowledge. So Don, it's a pleasure to finally meet you and sit down and have a conversation. And how are you doing today, my friend?
I'm doing good, Chris. Thanks for having me on. First time.
Well, I appreciate that, and certainly interesting. As we woke up Monday morning, we see further issues with Credit Suisse. Last week, it was issues in the British bond market with the gilts running into some trouble. And we've seen a lot of things stemming from the interest rate hikes from the Federal Reserve, which is finally starting to bring about some challenges in the world. But to start off, what is it that you are focused on today amidst all of that? And then perhaps from there, we can dig into gold and silver.
Yeah, thanks. I want to talk about two charts. So if you go back to 2008, in March of 2008, we had an 8-month correction. This is when gold bottomed in October of 2008. So it was basically 8 months. The same thing seems to be playing out this year when the Fed started lowering rates in March of this year, and we've had 7-month correction now. Now we're going into the 8-month. It's like almost deja vu. It's like history repeating itself. And go back this year to April, May, that's when the dollar started rising because the Fed started raising rates. And once the dollar started basically taking off, gold was basically dead. I said in my newsletters that gold is going to be is dead all the way through summer. So there's nothing we can do about gold doing anything through summer or the miners. We're basically stuck here. And I said we have to wait all the way until September. So once we got to September, I said, okay, now we finally have kind of this opening. So if you tie in that 8-month correction, now we're in this 8-month. In tandem with that 8-month correction, we're also in a 25-month correction off of the 2020 breakout. So the 2020 breakout, it peaked in August 2020. So we're 25 months into that one as well. So it looks like they're both kind of ending here. And today, the other chart that I want to mention is silver. The silver chart, can you pull that up, Chris? The silver chart, I think, and I mentioned this, and now silver broke out today. I said the silver chart is looking really strong. I tweeted this, and the reason why is the 22 level. Can we do the daily? You do the daily for the last year. Okay, so now you see this 1D. You see the 22. You see all those touches up there at the 22 level. Go back off just a little bit. Now those 22s, right. So if we can go back just a little bit on the 22s, well, you can see it a little bit here back in June. You can see all those touches at 22. It touched 22 quite a few times. It looks like it only touched it once, but it actually has touched 22 several times, and it goes back even further than June 22. So the 22 level, it was actually very, very important. And I basically said that silver was showing that once it gets above 22, it's probably going to be running. It's probably going to break out. We probably will never see sub 22 again once it gets above 22. And today it basically made this big move, but I think this is a false breakout here. The reason why is because I think we're going to see more selling in the stock market in October. I think today was Wall Street was basically thinking the Fed has to pivot here because of what happened with the Great British Pound last week. The Fed has to pivot, right? They're all anticipating the pivot. That's the reason why the market rallied today. They're all anticipating this pivot. Well, the Fed isn't going to pivot. If anything, the Fed will pause, and they will pause for quite a while, and the pain is still going to be felt. And the reason why, I think so far, every raise that they've had since March, I've been right on the amount. And I think that the raise in November, the first week of November, is going to be 50 basis points. And it might be the last one, or they might raise 25 in December. But I think they're only going to raise another 75 basis points. And then they're going to pause the end of this year. They're not going to pause yet. They still have one or two raises to go. And once they get done raising, they're not going to lower. Because the reason why is they want their tools back. It's very important for them to have their tools. Now, what are their tools? They only have two, right? Number one is low interest rates. So they want to get rates back down, right? Number two, they want to be able to print money to inject liquidity. Those are their two tools. They want them back. They want those tools back desperately. And they don't want to use those tools too soon, right? They're not going to start QE in this year. They're not going to start it in November, December, just because of some people are nervous on Wall Street that the whole system's going to melt down. They definitely are going to gamble here, risk it, because they want those tools back. And they know without those tools, if America does go into a deep recession, then what can they do? If they don't have those tools, they'll just make things worse. So that's kind of my overview. Today, I think, was kind of a false breakout. I think that gold is definitely going to go back below 1,700. It's over 1,700. You're not going to just run here and go over it. It's going back under 17. It'll probably go under 16 is my bet. I think we're going to see 1,550, 1,575 during this sell-off here in October. I think the sell-off is going to be somewhere between 3,000 and 3,300. It could bounce before 3,300, and then we might have to go down again. You know, that's how kind of the markets go. They go down, they bounce a little bit, and they go down again. We might conceivably see a bounce before hitting the very bottom here. But I want to see where gold and silver are at when gold is sub 3,300. That's what I'm looking for. That's kind of the number I'm looking for. Then I'll have a better feel for when we're going to break out.
Stocks are sub 3,300 rather?
The S&P 500 below 3,300.
Okay. And what is it that is leading you to feel a little less aggressive on the Fed rate hiking cycle? It seems like a favorite being priced by the markets for 75 basis points in November. What is it that's making you think that they're a little closer to at least slowing down and pausing right now?
The government's balance sheet. I've always said the Fed funds is never going to 4%. The reason why it's not going to 4% is because of this precarious situation the U.S. government and the U.S. economy has gotten itself into. It has a lot of money that it has to spend on a monthly basis. There you go. There's the interest. So we're up to $600 billion. You can't go to 4%, because you go to 4%, then that jumps to 800 billion a year. And everything just starts to break because people start to lose faith in bonds. People will start having a reason. The last thing the Fed wants is a reason for countries and investors to dump their bonds. It's the last thing they want, because then they have to print more money. So it's a fine line that they're playing with. And the Fed funds is not going to 4%. It's going to 3.5, 3.75. That's as high as they can go. Everybody's already realizing that they're basically playing with fire here just by getting rates to 3%. They got to pause now at 3, stop at 3, right? Well, they're not going to stop at 3. They're going to go higher, 3.5, 3.75, and then they're going to stop. I know I'm sounding like I know it all. I think I'm right. Again, people, nobody can predict the future. All we can do is guess. Those are my guesses, right? But those are my guesses, and I use those guesses to kind of just to understand where gold and silver are going at for investors. So, you know, when it's going to turn, how it's going to turn. I'm really big on kind of understanding the trend of gold so that I can understand, for instance, my exit strategy. my exit strategy on my miners. The only way I'm going to understand that is to understand where gold and silver are going. So I study it very, very closely. My newsletter, I always talk about macro in the beginning, and that's why. And so I connect the dots, if you will, for macro and gold and silver. And so that's the reason why I throw these numbers at you, is because that's my gut feeling of what's coming.
Yeah, which makes a lot of sense because that unfortunately is driving a lot of what's happening. And as you point out, it is an interesting dynamic where the Fed says they're going to let the balance sheet run off a little bit, stop buying treasuries. Yet, if you're raising interest rates and there's more debt being issued at the same time, leaves a little bit of a gap on how that gets funded. So, certainly quite a dilemma they're in, where again, you have inflation on the high side. So, not sure that there's any easy out yet. Back to gold, where you said you see still seeing some levels going forward lower than here. Do you think it would just be that pause that would ultimately be the spark that turns gold around, or what will eventually be driving gold higher? What do you think makes that change?
I'm definitely going to answer that question, but first I want to mention one thing about the deficit that people aren't really recognizing. The deficit is going to explode if we get a serious recession. And the Fed knows this. So there's no way that doesn't happen. So what are the odds of a serious recession? I think they're at least 90%. Stanley Druckenmiller, who I one of the guys I follow, one of the guys I listen to, he thinks that the odds of a recession are very high. And I agree with him. I think they're very high. So if we are going to get a serious recession, what is that going to do to the deficit? It's going to make the deficit go much higher, right? We're already at $1 trillion. So what does that do to the deficit? Basically pumps it up to 152. And if they try to do, if the Congress, Congress, they don't really care too much about the debt anymore, right? Nobody talks about the debt, and they're really concerned about people not having jobs. We do a lot of these stimuluses, I call them stimmies. So if we go into recession, Congress is apt to print money, right? They're apt to do some type of stimulus, right? So that's going to make it go up higher, but their tax receipts are going to go down. So the combination of lower tax receipts and stimulus, you're talking about a $1.52 trillion deficit. And then your interest payments are going to be going up on top of that. So this combination is really dangerous. And the Fed knows this. This is the reason why you're not getting a 4% Fed funds. I just want to mention that. Now, what's going to be the driver of gold higher? It's a combination of two things. The first, of course, is going to be the dollar rolling over. So we got the dollar today, 111.8, which is basically 112. And I said, if the dollar doesn't get back to 113 this week, look out, it might be rolling over here. And if the dollar doesn't get back to 114, 115 by the end of this month, it's probably going to roll over here. And so that's going to be really good for gold. I think once the dollar gets below, say 107, 106, 105, I don't know the exact number, one in that range there, I think it's kind of over for this rally in the dollar. So I'm looking like 107, somewhere in there. Once we get down there, it's like, forget about the dollar turning back around is my feeling. And that is going to start basically rolling back down. So we're at 95 before they start raising, right? So that's really that's kind of where we're going back to once, the other countries start raising their rates and the Fed starts lowering theirs. So once they pause, the Fed's not going to lower their rates, I don't think, until Q3 or Q4 next year. So we're probably not going to get back to 95 until then, but we're probably going to go back to 198, somewhere in there, by June, maybe less, maybe March. So I'm looking at basically Q2 of next year is when the dollar really starts to roll over. So it's kind of a ways. So that's number one. Number two, the other trigger for gold and silver to break out. And I do think we got to get down to, 96, 95 on the HUI to get to 2000 gold. I just don't think we're going to break out to 2000 gold until we get the dollar down quite a bit. That's kind of my gut feeling. So the other trigger point is fear, the fear trade. The reason why gold took off in October of 2008 is because of the Lehman Brothers event. The Lehman Brothers event created systemic risk, and that systemic risk is what ignited the fear trade in gold to push gold all the way up to 1935, over 2.5 years after the Lehman event. Yeah. So I think we're going to get some bad news here in October, November, December. Somewhere in the next 3 months, we're going to get a bad news event that's similar to the Lehman Brothers that triggers the fear trade. And that's what's going to push gold and silver higher. I think that silver might have bottomed at 1750. The price action really says that silver has bottomed here. Not guaranteed, but that's kind of what the price action is showing us. I don't think gold is bottom. Gold hit 1615. That was a low at 1615. I don't know if 1615 is going to hold. It's possible 1615 and 1750 both hold here. Bottoms in, and now we're just getting ready here to take off. It's just a matter of when. But we're going to have to watch the price action. We're going to have to watch the markets, what they do. But I think in the next 90 days, we're going to get a bottom in the markets, and that's going to be good for gold. It's going to reignite the fear trade, and we're going to get a 3-year, 2.5, 3-year run in gold that's going to take it somewhere between 2,500 and 3,000 is kind of my conservative number for gold. 50 to 75 for silver.
Say that silver part again.
The next 2 to 3 years, 50 to 75. It's my conservative number after the fear trade ignites.
Yeah, actually, something that I heard you mention in one of another interview you've done, where you said that gold and silver don't respond as much to inflation, but it's more the systemic chaos or the risk in markets that we see there. And so certainly along the lines of the silver target you've had, because right now we see a lot going on. We see plenty of inflation. Silver is still at $20. So perhaps you could touch a little bit more on what you see the path with silver, and whether it is something like a Lehman moment, which there were some suggesting that what we saw out of Great Britain last week was not far off from that. And certainly from what I've read, it does not sound like an ideal situation. And we saw how quickly they reverted back to more quantitative easing. So perhaps you could talk about that and how that might drive silver to some of those levels.
Before I talk about silver breakout and the drivers, I want to talk a little bit about interest rate and the dollar impacting, and inflation impacting gold, right? So last year, we basically, we start with the dollar. First of all, I think that all three of these are indirect drivers of gold, not the main driver. The main driver, in my belief, is fear because of Exter's pyramid. I don't care about $100 moves in gold, $200 gold moves. I don't care about minor moves. I'm in this for a generational, once in a lifetime move, bull market. It's the only thing I care about. I want to sell to the top. And what is the top? The top could be anywhere from $2,500 to $3,500 gold is my expectation. That's all I care about. I don't care about these incremental moves. You know, gold going to $1,900 doesn't mean anything to me. Actually, what it means is I can't buy anymore because the HUI is too high. I'm just watching, right? So inflate. Let's go with the dollar first. So the dollar has this indirect pull on the gold, but where it really can impact gold is when it gets to extremes. If the dollar gets super high, like over 105, you know, that's when gold is kind of stuck. Right. That's when the dollar's the boss, and the dollar's the boss right now. Once it gets at a certain level, it's the boss. Inflation is the same way. It has to get to an extreme. If inflation right now is running at 10%, gold will be higher. I mean, if the government was saying it was at 10, and if inflation gets to 15%, it would be higher, right? Go back to 1980s. I mean, gold and silver exploded because inflation went all the way to 15%. So if inflation hits extremes, then yes. Interest rates are the same way. If interest rates get to extremes, then gold will take off. If interest rates go to negative 1%, gold's going to go nuts. Right. So you need extremes. These are all indirect players. They can move gold, $5, $50, but they're not going to give you all-time highs. The only thing that gives you all-time highs is systemic risk. And that's what we're starting to experience here. The only way we get to $2,500 gold or even $2,000 gold is systemic risk. Okay, so now let's look at silver. What are the drivers? What's going to push it higher? So in my opinion, ultimately gold has to lead. If gold doesn't go to 2050, there's no way silver is going to $50. It might. It could. The technical charts look great, but I really feel they have to go together. And I always call gold the big dog or the big brother and silver little sis, because gold is such a bigger market. You're talking, if you look at the inventory, right behind you, you have 1,000 ounce pallets. There's not very many 1,000 ounce pallets out there in the world today. So the inventory, the real inventory level today is actually tiny for silver. On a dollar basis, it's in the tens of billions. It's tiny versus gold. Gold is in the trillions of dollars. Right. It's a very liquid market because that's what people do with gold. They just sit on it. Whereas in silver, every year, 60 to 70% of it is used. And most of that is not recycled. Maybe 10% of it's recycled on an annual basis. So most of it is basically used and then goes into a landfill because it's just tiny, tiny little pieces of it, like are used in phones or in cars. When they destroy a car, they don't take the silver out of it. Same with the phones. And, they're starting to think about it a little bit more because of ESG. But by and large, they don't recycle silver because it's just using, all your appliances have just a tiny little bit of silver in it, right? All your electronics, all your computers, tiny little bit of silver. They don't recycle that stuff. So silver basically goes to landfills. There's no inventory of these 1,000 ounce bars. As a matter of fact, I did some research. Nobody knows the inventory level. The people that do this for a living, that spend a whole year researching silver, they don't know how much inventory is available. Now, I talk about inventory. I'm talking about wholesale inventory that's for sale that people can buy today. Right. Very little. Over the weekend, I was watching this one interview, and this guy said that he today could not, if somebody gave him $1 million, this is $1 million, and he wanted silver dollar bars, he could not get that silver in one phone call. It would be impossible. Nobody has, and this guy has all the connections in all the wholesale markets. Not a single wholesaler out there's got $1 million in silver. What does that tell you? It's tight. There's no silver inventory out there. So, and once we get above $35, so what's going to drive silver higher? First of all, we got this tight inventory, so that's going to drive it. And I've been saying, they did the Wall Street silver squeeze, and I said, you guys are early. Until we get above $30, it's not going to work. Well, maybe it's working a little bit. But once you get above $30 silver, that's when the retail market shows up. For some reason, silver is really weird. I remember buying silver back in 2016, 17. I was buying silver bars under $15, $14. Nobody wanted it. It was a joke. Nobody wanted to buy silver at $14, and that's with a premium. Right. Now today, nobody wants to buy. Well, you got these high premiums, of course, but even if premiums were low, I don't think that you'd have a lot of huge demand. But where it kicks in is that once silver gets above 30, for some reason, people love to buy silver when it looks valuable. When it looks valuable, silver. People were buying silver last time back in 2011 when it got over $40. People were going nuts for silver when it got above 40. That's going to be the same thing. Once silver gets above 30, the retail crowd's going to show up. The reason why is because of psychology and the herd. That once silver gets above 35, they're going to start mentioning it on all the cable news shows. Silver's at 35. First Majestic's trading at 25. Everybody's going to be starting looking at silver and that psychology in the herd, and everybody's going to be wanting to buy physical silver. If you think silver inventory is low now, wait until we get to $35, $38 silver. You won't be able to find any. It's going to be, they call it unobtainium, and I believe that's going to happen. Now, so the demand in retail is going to be a big driver of it. The other thing that's going to be a big driver of it is gold, in my opinion. So once gold gets to 1850, 1950, right in there, silver's going to be back to 25. That's just how it works. Now, you're going to tell me silver is what pushed gold to those levels, or do they move together? I'd say they moved together. It wasn't silver driving it. It wasn't. I think it was little sis following Big Brother myself. Now, silver's leading here, but it's only leading off the bounce. It's leading off the bottom. The reason why is because silver's so undervalued. And that it got broken down first. It went all the way down to 1750, which is, very, very cheap for silver. I mean, the silver miners basically can't make money at 1750
Right.
silver. The gold miners, they can make money at 1650. So it just tells you silver was oversold. That's why it's kind of leading off the bottom. But it's going to be gold, in my opinion, that hits the breakout number first. So what are the breakout numbers? Now, one of the most risky investments is margin holding, going short or long, say silver. So you basically control 5,000 ounces of silver, but you have this margin exposure. It's one of the most risky investments out there. You can get killed because of the margin. But what is the safest time to make that play? Well, it's not today. It's not at $27 silver. It's at 30 because of the technical chart. So once you get above $30 silver, there's basically there's very little resistance from 30 to 35 and then from 35 to 50. So if you took control of 5,000 ounces, once silver got above 30 and you had to stop at 29, because you got to protect yourself from the margin, maybe you go to 28. If you did that, you could basically make a boatload of money as silver trends from 30 to 50, the all-time high. So to me, I'm just using that trade as an example of where the breakout is in silver. It's at 30. That's where we have to get to. Now, let's go back to gold. Gold's breakout, I believe, we've seen it go over $2,000 and it just came back down. So if we get to 1950, I don't think that is the breakout. I think the breakout is 2050. So what do we hit first? Do we hit 2050 gold first, or we hit 30 silver first? I think it's going to be 2050 gold. Yeah. In that respect, gold's going to lead the ultimate breakout. Silver led the breakout on the bottom, but it's going to be gold that leads the breakout to the new bull market. The new bull market begins then, $30 silver, 50 gold. So right now we're just waiting, for that to happen. Now, I'm going to start to get excited once we get above 22. Once we get above 22, I think it's going to be a very short period of time before we get to 25. Once we get to 25, then we just look at 27, we look at 29, we go to 30. We just kind of follow it up. So I'm a buyer at the HUI below 230. So that's going to be probably the silver right around 25, I think. So I'll be buying for a while here, but once silver gets back, once the HUI gets somewhere around 220, 230, then I'm basically I'll stop buying at that point, and then wait and see if we have another correction.
Yeah, and that was actually ties in with the last thing I wanted to run by you, because I know you dig into the gold and silver mining stocks quite a bit, which obviously have been beaten up pretty thoroughly. Did you expect this much of an extreme move, especially in some of those silver juniors and the gold juniors as well? Did you expect them to fall as far as they have on the move in the gold and silver prices? And where do you see that going forward?
Well, kind of a yes and no answer to that. So it was hard when we had a breakout. Actually, this year in March, February, March, when the war started in Ukraine, we actually had a breakout, and the HUI went all the way to 320. You can bring the HUI up. So when the HUI got all the way to 320, I was basically saying, I hope that 350 holds, but it probably won't, and we're probably going to go somewhere down to, say, 220 to 230 was kind of my original. When it was all the way up to 3, so you see it at 320, 325 there. So I thought maybe we'd go down 220, 230, but as the dollar got strong, I didn't think the dollar was going to get this strong. I mean, one of the reasons why gold got hammered so hard here is because of the dollar. So I didn't think the dollar was going to, run to 110, 115. But as the dollar got stronger and stronger, then I started lowering my targets. And I actually got my targets all the way down to 150 to 165. And I thought that we probably were going to, and we still probably possibly could, the HUI could, I didn't think the HUI would go below 150, but I thought it could go to 160, 165. And I thought we were going to see 160, 170, 170, 180. We got down to 172. So your chart doesn't look right there to me. Because we definitely traded at that says 179, but what does that one say? There we go, 175. We actually traded 172. That was on September 1st. So I see September 1st, but it's not low enough for me. Those are the closes. Those are the closes. I'm talking about intraday. Right. Intraday got down to 172. So I think that might be the bottom, 172. I don't think we're going to 150, which is good. And so, yeah, I think the HUI is starting to look more constructive here. I was actually disappointed in the price action today because I have some buys I want to do this week. And now I have to buy those stocks more expensive. And now we're probably going to dump back down to 180 on the HUI. I don't really want to wait for it. So yeah, 172 could be the low. I think 175 is the low. We're not going lower than that, and 172 might hold. It all depends on what gold does and what the S&P does. Until we get to 3,300, we're not going to have a good idea on where we're at.
Right. Well, will certainly be interesting to see a lot of things happening quickly. And I guess before we started recording, we were talking about how a lot of the events that perhaps lead people into gold and silver seem to be coming to a head right now. We're seeing that in the currencies and the foreign bond markets. And anyway, just appreciate you shedding some light on how this is all playing out in gold and silver. Perhaps before we wrap up, you could let folks know where they can find you on the web and get access to your research, which I think would be helpful in this particular time.
So of course my website, which is right behind me, that's kind of hard to miss. Then you can catch me on Twitter. It's just my name, Don Durrett. So if you go to Twitter and search for Don Durrett, you'll find me there. I'm on Twitter quite a bit. I actually have a separate gold and silver. I shouldn't say this because now a bunch of people are going to want to join. It's kind of a private community for gold and silver investors. There's about 700 people in there right now. It's called gold and silver mining stocks. That's the community. So you have to ask to join. And then I just added Substack, and the Substack is really pretty cool. It has all these rankings. So go ahead and scroll down. These are the silver stocks. So I rank all of the silver miners. Can you scroll down, Chris?
Sure.
So there's the expected winners, and these are ranked. So I have Aya ranked first, Silvercrest second. So these are the expected winners. Scroll down a little bit more, and it'll have the should winner. So these are the should be's, and then I have the could be. So I'm basically ranking all the silver miners. I do the same thing for about 5 other categories. The other thing that's nice, I actually, on my Substack, so if you want to find my Substack, just go to Google and search Don Durrett Substack. And on there, I actually posted this month's newsletter for free. The first time I've ever given the newsletter away for free. So you can go there and read the newsletter. I don't think I'll do that again, kind of a one and done. There it is. There's the newsletter. And if you subscribe, then you're going to get any changes that I make to my Substack. One final thing I want to say is that I'm actually going to give you guys a discount if you join my website. So there's a discount code. It's good for 30 days. The discount code is GSD, the 3 letters behind me, GSD, and then the number 15 for 15% off. So it's GSD 15.
Well, and I appreciate that, Don, and we will have the links to all of those as well as that code in the description field below. And good to have folks like you out there that have such a good understanding of the mining stocks and also tracking the macro picture. Perhaps not the easiest time for folks to watch some of these things that are going on, although just appreciate you making some time and joining me today to shed some light on it. And we'll have to do this again soon.
Yeah, Chris, it was great. I enjoyed it. Thanks for having me on.
Well, thank you, Don, for joining me. Nice to finally meet him after reading a lot of his research for years, and certainly had a fun time talking. Hopefully you found that helpful at home. Before we wrap up, would like to mention today's video brought to us by Kuya Silver. building the next high margin silver mining company down in Peru. And Kuya Silver, run by David Stein, who has appeared many times on the show, has a resource of 5.9 million ounces indicated, 8 million ounces inferred that they are bringing towards production in the next couple of months. Also, as you may have seen in the video we had here recently, they're beginning to commence field work at their Carmelitas project, which could be another additional source of mineralization that they're excited to explore. So thank you to Kuya Silver. You can find out more about them at kuyasilver.com. With that said, we'll wrap up for today, but we'll see you again tomorrow, and hope you're having a great day out there.